What's going on? So I'm an ultra noob trader, but I've learned some lessons shorting Cardano over the last few weeks. So I thought I would talk about my trading lessons as a total noob. So first of all, just to recap what this trade was, I shorted Cardano, not specifically because I have anything against Cardano, but more just because I felt like the macro environment was very bearish and that this would drag down crypto and particularly be hard on altcoins. I picked Cardano because it seemed overvalued relative to other blockchains like Solana and Avalanche that have way more actual users and total value locked, but are worth like half as much. So I put on this massive, well, relatively massive position on Cardano. I would say I had about one account leverage on DYDX. I was shorting the perpetual. And at first the trade went in my favor. I was up 15-20%, like in the span of like a few days or so. And I was feeling good about it, like, yeah, okay. And then like just a day or two later, Cardano shot up 50% and I was down 30%. And then my account leverage, that's just a function of how big your position size is. I mean, so it's a function of the price. So my account leverage also shot up, I think, to 1.5, 2. And then I was freaking out because then I was thinking like, wait a second, like I could get liquidated here. So I sold some ETH to add some USDC into my account so that I had more capital to avoid getting liquidated. And then I put in some stop losses. Should have done that in the beginning. And then Cardano went back down, but then it went back up and it just proceeded to completely outperform every other token. While every other token was bleeding, Cardano just kept going up, and not on any news. It was just going up. And just like 3 days ago, I was just fed up with it. I had enough because Cardano was going up while everything else was going down. So I sold half my position. In hindsight, that was a terrible decision. I would have, I lost a lot of money by selling there, but it's all good. One of my lessons was to diversify my shorts unless my conviction is particularly strong on that one token. As you can see, like my conviction wasn't that strong on Cardano. I was more just betting altcoins would go down. So I should have diversified my tokens so that I wouldn't be overly exposed to the like specifics of any one token. So now I'm also short Solana. And then also I'm building up a short position in Polkadot and Cosmos as well. And I'll probably add some more tokens as well. So definitely I wish I had diversified my shorts. Do that if your conviction isn't that strong on one token, especially with Cardano. I don't know who the hell's buying that, but anyways. So learn to position your sizes accordingly. This is probably one of the most difficult parts of trading. I'll just say one thing is like, don't use leverage. Honestly, like unless you have very strict stop losses and also like profit taking targets, because otherwise leverage will destroy you. You will get you don't want to get liquidated. If you get liquidated, you literally lose everything. So really don't want to be in that position, even if you're directionally correct. If you have too much leverage, then the volatility can crush you and get you liquidated or have you hitting your stop loss, and then you'll be down. So do not lose leverage. So it's tough to know. There's no like particular answer as to like when your position size is too large, but if you're like losing sleep overnight or like freaking out or tempted to panic sell or unable to focus on anything other than price charts, then your position size is probably too big. So yeah, and also your position size is too small if you feel like when the trade goes in your direction, you feel like desperate to like add in a lot more money and increase that position. So yeah, I mean, don't use leverage and don't trade too much, don't trade too little. But if you're just starting off, too little is actually fine just to learn the ropes. But like you gotta have some skin in the game too. But definitely don't be like losing sleep over trades. If you're doing that, like you have way too much in already. So take profits. I should have taken profits when my Cardano was up 15-20%, particularly when you have like a really drastic market move to like, especially to like a new low or a new high. I think take some profits. I mean, markets, they don't move in a straight line. So like generally if it's so oversold or so overbought, like probably there's going to be like some mean reversion there. So yeah, like take profits. Like there's no shame in taking some profits. Maybe you give up greater profits, but like if you don't take profits, then like I mean, like the natural psychology, I think, is, at least for me, and I think probably most people, is when you're in the green, naturally, like you feel like this confidence, and you feel like, yeah, like I'm gonna get even more, and then you kind of hold the green positions, and maybe it works for a little bit, but then eventually, usually things kind of start to revert, and then eventually you might be in the red, and then if it keeps going down in the red, then you might be like, oh my god, like maybe I was wrong, like you start freaking out, like, oh my god, I don't want to get liquidated. Then you might be tempted to panic sell, like I was 3 days ago, and then you're just ending up like being in the red. Like that's not a good strategy. So like learn how to take profits. Generally things do kind of mean revert, like even in this bull market, right? Like these tokens went up so much, like Matic went from whatever 6 cents all the way to 275. Like it's so hard to time it. Just like if you rode that and then you didn't sell at all in like the peak of the bull market, then like you're short selling yourself. So anyways, stop thinking about the past, focus on the next trade. So stop thinking about your peak net worth, like just how bad or good your last trade was. Like focus on the next trade. There are always opportunities out there. Seize them. There was a famous basketball coach who coached some of the most famous players like Michael Jordan, Kobe Bryant. He said that what separates the best, the all-stars, the superstars from the rest, is that the best are always focused on the next play, the next shot. They're not thinking about the shots that they missed earlier in the day, stuff in the past. They're focused on the next shot. The past is a sunk cost. Learn your lesson and move on. Stop, like chasing like your peak net worth highs of the past. That leads to emotional trading, and that's how you lose in trading. Success in trading comes from being disciplined and having a system. That's it. So learn your lesson from the past, focus on the next trade. So step away from the computer. That was a big lesson. Like even like when you're just staring at the price charts all day, it's so easy to overtrade, micro optimize. It's basically equivalent of like trying to pick up pennies in front of a steamroller. Okay, that's a pretty drastic analogy, but it's just like even today I was spending a lot of time staring at the charts, like trying to make these like little short-term trades. Like unless short-term trading is your specialty, like you're wasting your time. Like and also like this can psychologically get you to like over focus on the short term and miss the bigger picture, the forest for the trees. So like just think bigger picture. Don't lose focus. Don't get like all caught up in the little micro optimizing weeds. Just do what you need to do. Put on like limit orders if you need to, if you want to be able to still make orders while you're stepped away from your computer. Get away from your computer. I would have made more money if I just done nothing today, other than like the few limit orders that actually mattered. I would have made more money if I did nothing and I just left, went outside, went for a walk, went on a little trip, than with like my stupid little micro trading. So yeah, learn when to step away from the computer, step away from your work. Do something more productive than just staring at the price charts. Maybe if you want, you can do some research, or you can work on whatever business idea you're working on, day job, or just like enjoy life, relax, hang out with your girlfriend or alone, or do whatever, like refresh, reset yourself, and then you'll come back hitting it stronger, and you'll probably have made more money than if you had wasted your time and energy micro optimizing. Okay, so my current trading positions are I'm short Solana, Cardano, Polkadot, and Cosmos. And I may add some other altcoins into the mix. Now, right now, the market is very oversold, so I wouldn't necessarily recommend just diving in right now with some shorts. Personally, I'm dollar cost averaging in. Again, one of my lessons was not to have too big a position. So right now my leverage ratio is probably like I'm at like 0.5. One would be like if I'm trading my entire account's worth. But so when probably like we'll see some relief rally or something. So when that happens, I will add to my short position, but I'm definitely not going to be adding like a ton because we're already oversold. So, and I don't want to ever feel this pressure to like panic sell when the trade is going against me. So just trading comfortable amounts, and overall I'm still very bearish the macro outlook, because we had the inflation number just surprised the upside on Friday, We had the lowest consumer sentiment on record in this Michigan survey. It's not looking good. Federal Open Market Committee, the FOMC, the Fed, they're having a meeting next week. That'll be very important, and probably they'll just raise hike rates to 50 basis points as planned, but it's always possible they could hike even higher, but I don't think they would do it in this meeting. But there's no doubt they're going to be hiking, continuing to hike and tighten amidst this very high inflation, and especially since the employment market is still looking good. So not looking good for risk assets, not looking good for crypto and alt tokens. So stay safe out there. If you are overexposed on the long side, consider hedging with some shorts. If you're not overexposed on the long side, still consider hedging with some shorts. I'm not saying now is the best entry point, but definitely if we see relief rally, then I will be pouncing on that and adding to my short positions, because I see stock market correcting another 15-30% easy, and crypto easily going down. Personally, I can see Ethereum going down to 1,000, 1,200, maybe even lower than 1,000, which is crazy to even think about, but it's certainly possible. I think 2,800 on Bitcoin is a bit of a support level. I guess around 1,400 on Ethereum, but with these support levels, like, you never really know until it happens. So like if we break below that, then could free fall for a bit. So that's why I got my shorts. But not financial advice. Do your own research, and just be responsible. Don't use leverage, or at least be very careful with it, and you put stop losses. If you're not particularly sold on one particular trading position, diversify, dollar cost average in, focus on the next trade. Learn your lessons from the past, but don't fixate on your peak net worth of the past. Focus on the next trade, the next opportunity. That's it for this video. Catch you next time. Peace.